Have you ever wanted to impress someone with your BeachBody but you never had one? Well, now is your chance. You can own the BeachBody stock for only $11 per share. Go to your online broker and search for the ticker symbol FRX. Again, that is ticker symbol FRX. What's up, millennials? Today we're going to take a look at the valuation of a company called BeachBody, and this is a company that is in the connected fitness world that is going to be acquired by the SPAC that's currently trading under the ticker symbol FRX. Now, before we start, if at any moment in this video you're like, what the hell is this guy talking about? Please check out my SPAC guide that I released a few weeks ago. It's going to be in the description, and today we're going to be talking about method number 2. If you need access to the Excel sheet, then you can go to our Discord. You can join it for free if you go to nesami.com/discord. You can leave your name, leave your email address, and you're going to get access to it. And lastly, don't trust me, verify me. I'm just documenting my journey here on YouTube. I'm not a financial expert, so always check what I am doing. So BeachBody is a connected fitness company, and they have a subscription model just like Peloton. They are a competitor to Peloton as well, and they already have quite some revenue, which we're going to take a look at later on in this video. One of the interesting things about this company is that they are working with influencers to promote their company. As you can see over here on the screen, people like Shay Mitchell, Arnold Schwarzenegger, and of course LeBron James. And with regards to the merger date, we don't have a date just yet, but it is expected to close in Q2 of this year. Then if we go into their investor presentation, we can see that they are going to have 342.5 million shares outstanding after the merger. And of course, they're trading at a share price, or they were trading at a share price of $10 per share. So if you multiply those numbers, you're going to arrive at a pro forma equity value, or basically the market cap after the merger has been completed, which is going to be $3.425 billion. Then we can also see that they are going to have $491 million in cash on their balance sheet. So then you can already plug in those numbers in your Excel sheet, and then it's going to give you this market cap of $2.9 billion. So that basically takes that pro forma market cap of $3.4 billion, takes off the amount of net cash, almost $500 million, and then it's going to arrive at that enterprise value of $2.9 billion. Thing is, however, if we go into TradingView, we can see that they are currently trading at $11.10 pre-market. So $11.10, and that is the price that you can put over here in your Excel sheet. And then the Excel sheet is going to calculate the rest for you. So the pro forma market cap right now, based on this new price, is $3.8 billion, and the current pro forma enterprise value is $3.3 billion. But of course, we want to know what a fair price per share is. And first of all, for getting a fair price per share, we first need to know the fair enterprise value. To calculate the formula for an enterprise value is going to be very simple. We're going to be taking a look at the revenue of a certain year. We're going to apply a certain multiple to that revenue, and then we're going to arrive at an enterprise value. So let's first take a look at that revenue. And today we're going to take a look at the revenue of 2022 for this company, BeachBody. So as we can see in the investor presentation, they expect to have $1.479 billion in revenue in 2022. The good thing about this company is that they already have revenue. As we can see in the last couple of years, in 2018, they had $790 million in revenue, then $756 million, then last year, $880 million, and this year they expect to bump it up to $1.1 billion more or less. It is interesting to see, by the way, that the revenue has stayed relatively flat, of course, in the last couple of years. In 2020, we did have a good year of 16% up compared to 2019. But yeah, the question is, are they going to be able to execute in the next coming years? Are they going to be able to reach this compound annual growth rate of 30% or not? That is, of course, the question. We don't know for sure, but it is something to keep in mind. Anyways, the revenue number we are going to be looking at is this number over here, so $1.479 billion, which is a number you can plug in your Excel sheet over here. So that is the first number we are going to need. And then we, of course, need a fair revenue multiple. For that, we're going to go to this page, the valuation benchmarking page, basically meaning that we're going to compare the current multiple of BeachBody with other similar companies out there in the same space. So if we take a look at the BeachBody company, we can see that in 2022, their revenue multiple is 2x, because we saw that the revenue is 1.5 billion more or less in 2022. The enterprise value was almost $3 billion. So that means that the revenue multiple of 2022 is 2. Then if we can take a look at the other companies that we have over here. So we have some digital subscription companies like Netflix, Spotify, and Disney. They are trading at an average multiple of 5.7x. We can see that Peloton is trading at 7.9x. And we can see that the growth, consumer health, and wellness companies are trading at an average multiple of 7.5x. So especially if we compare BeachBody to Peloton, I think the BeachBody is a slightly smaller company rather. So I think that the BeachBody could maybe deserve a slightly lower multiple as well compared to Peloton. What I've come up with is a range of multiples with a multiple of 5x on the low end and 7x on the high end. I think those are fair multiples, but if you want to change those multiples, you can of course use the Excel sheet to do so. So yeah, you can just plug in different multiples if you would like to try out the valuations with those multiples. So then if you have plugged in those numbers, the Excel sheet is going to take care of the rest of the calculations for you. It's simply going to take that revenue of 1.5 billion more or less, and it's going to multiply that by the low multiple of 5x to arrive at this enterprise value of 7.4 billion. And it's also going to do the exact same thing with the high multiple of 7x to arrive at an enterprise value on the high end for $10.3 billion. Then you can also say, okay, so we have this low valuation, we have this high valuation. Let's now take a look at what the midpoint valuation is, which is basically the average between the low and high valuation. And that in this case is going to be $8.9 billion. But that is of course the enterprise value. We want to know a fair price per share. Well, first of all, what we need to do is we need to go to a fair market cap for this company. And the only difference between the enterprise value and the market cap is the amount of net cash they are going to have on their balance sheet. And in the beginning of this video, we said that that is going to be $491 million in cash on their balance sheet. So if you take those enterprise values we just calculated and you add back the amount of net cash, then you're going to arrive at these fair prices per share. So for the low end, that will be 7.9 billion. For the midpoint valuation, 9.4 billion. And then for the high valuation, 10.8 billion. And then the only thing to do to arrive at a fair enterprise or fair price per share rather is to take these market caps, divide them by the amount of outstanding shares after the merger, which we said was going to be 342.5 million shares, and then you're going to arrive at these fair prices per share. So for the low valuation, you would arrive at $23.02. For the midpoint valuation, $27.34, and for the high valuation, $31.66. So based on these calculations, that would mean the BeachBody is currently actually undervalued. Now, as always, don't trust me, verify me. I'm just documenting my journey here. I could be completely wrong, so always check what I am doing. And also keep in mind, we have been taking a look at assumptions. We've taken a look at a predicted revenue of 2022. We've applied a certain range of multiples. So if you change one of those numbers, the entire calculation is going to change and your fair price per share is going to change as well. With that being said, thank you very much for taking the time to watch this video and I hope to see you in the next one. Bye-bye.